Based on the latest financial data from the first day of 2026, the Iraqi economy shows a picture of relative currency stability on the official market, but underlying economic pressures. The Central Bank of Iraq is actively working on monetary policy and banking reform, while the stock market displays significant volatility and concentration of activity. Here is a breakdown of the current situation regarding the Iraqi Dinar, IQD, and the Iraqi economy. Big data heading monetary policy and banking reform. The Central Bank of Iraq has pegged the dinar to the US dollar. According to the latest data on January 2, 2026, the official USD IQD rate is 1,310.96, marking a slight increase of 0.07% from the previous session. Forecasts suggest the rate is expected to hold around 1,310.00 for the coming quarter and year. However, there is a gap between official and market rates. In Baghdad's currency exchange shops, the US dollar traded between 1,440 and 1,445 IQD. In Erbil, the rate was slightly lower, ranging from 1,432.5 to 1,433.5 IQD. The market exchange rate used in stock trading is reported at 1,320 IQD per dollar. Central bank actions and economic indicators. The CBI has set its official exchange rate at 1,300 IQD per US dollar, a move initially made in early 2023 to combat inflation and reduce the parallel market spread. Key economic data includes Iraq's inflation rate minus 0.50% as of October 2025, Iraq's interest rate 5.50% as of October 2025, unemployment rate 15.50% as of December 2024. A critical reform is the CBI's banking reform plan, which involves restructuring and consolidating the banking sector. Several banks, including Al Taif Islamic Bank, are pursuing mergers as part of this directive. Iraq's stock exchange performance. The stock market provides a real-time view of Iraq's corporate financial health and investor sentiment. Top gainers past week. Nationality H Furniture, IHFI, plus 13.6%. Iraqi Islamic Bank, BIIB, plus 13.3%. Modern Construction Materials, IMCM, plus 8.2%, up 70.4% year-to-date. Top losers past week. Al Ansari Islamic Bank, BANS, minus 41.7%, down 93.0% year-to-date. International Islamic Bank, BINT, minus 35.5%. Iraqi for Carton Manual, IICM, minus 34.4%. The banking sector dominated trading, accounting for nearly 80% of the total trading volume of IQD 5.73 billion, approximately USD 4.3 million. Major developments and regulatory moves. Market strategy. The Iraqi Securities Commission, ISC, is preparing to launch a new 2026-2028 strategy. This plan focuses on digital transformation, attracting foreign investment, and increasing market liquidity. Suspensions and resumptions. Trading activity is being shaped by corporate governance. Several companies were suspended ahead of annual general meetings, or AGMs, to approve financial statements, capital increases, and reform plans. Conversely, stocks like Babylon Hotel resumed trading after approving a cash dividend. Market monitoring. The ISX is actively questioning companies like Al Ansari Islamic Bank, BANS, about sharp price declines to ensure transparency. Key investment sectors and considerations. For investors, the most active and influential sectors on the ISX are banking, the most dominant and volatile sector directly impacted by CBI reforms. It offers high potential but carries significant risk due to ongoing restructuring. And hotels and tourism, which showed notable activity, contributing over 9% of the week's trading volume. includes companies like Modern Construction Materials, which has shown strong year-to-date performance. Key Insights Summary. Dual exchange rate reality. A persistent gap exists between the CBI's official rate and the rates used in everyday commerce and the stock market. Reform-driven volatility. The CBI's banking reforms are causing significant movement in the stock market, with some banks surging while others face severe pressure. Sector concentration. Investment liquidity is highly concentrated in the banking sector, making the broader market performance heavily dependent on its fortunes. Regulatory push for growth. Authorities are implementing strategies to modernize the financial markets and attract investment, which could improve stability and opportunities in the medium to long term. This is a crucial moment for Iraq. On one hand, the official dinar exchange rate is holding surprisingly firm at 1,310 dinars to the US dollar, showing a level of monetary stability not seen in years. On the other hand, this official stability masks a complex web of pressures, a gap with the local market rate, a historic banking sector shakeup, and a severe political paralysis that is threatening to bring the entire economic system to a standstill. The reality of the Iraqi dinar, stability under pressure. Let's start with the currency itself, the focal point of so much speculation. Here are the facts. The official exchange rate, as set by the Central Bank of Iraq, the CBI, is 1,300 dinars to the US dollar. On the official market, this rate is being defended. As of January 2, 2026, the USD IQD rate was 1,310.96, showing only a 0.07% movement from the day before and a minimal 0.15% depreciation over the entire past year. Analysts forecast this rate to hold steady at around 1,310 for the foreseeable future. However, walking into a currency exchange shop in Baghdad or Erbil tells a different story. In Baghdad, the dollar was being traded between 1,440 and 1,445 dinars. In Erbil, the rate was slightly lower at 1,432.5 to 1,433.5 dinars. This gap of roughly 100 to 135 dinars between the official and parallel market rates is a critical indicator of underlying economic stress and liquidity issues. The CBI has been clear on its policy. It has repeatedly denied any intention to revalue the dinar, stating its focus is on using monetary policy to control inflation, which has indeed fallen to historically low levels. Why the gap persists. The government is currently operating as a caretaker administration with severely limited powers. This political vacuum means the state cannot pass a new budget, approve major projects, or, most critically, legally borrow money to cover its expenses. By the end of September 2025, the fiscal deficit had already reached 17.7 trillion dinars, about $13.5 billion. This liquidity crunch is felt throughout the economy, driving demand for dollars on the parallel market and maintaining pressure on the dinar's street value.
The banking revolution. The number of banks may decrease by half. While politics is frozen, one sector is undergoing forced radical change. The Central Bank of Iraq is in the midst of executing a sweeping banking reform plan developed with international consultants like Oliver Wyman and KPMG. The goal is to create a smaller, stronger, and internationally compliant banking sector. The head of the Association of Iraqi Private Banks has stated this could lead to the number of banks, currently about 60, decreasing by half through mergers or exits. This isn't just talk, it's happening live on the Iraq Stock Exchange. Evidence from the trading floor, week ending Jan 1, 2026. The stock market is the clearest real-time proof of this shakeup. In the past week, banking stocks accounted for nearly 80% of all trading activity. The performance of individual banks tells the story of winners and losers in this reform. Top weekly gainer, Iraqi Islamic Bank, BIIB, up 13.3%. Top weekly loser, Al Ansari Islamic Bank, BANS, down 41.7%, and down a staggering 93% for the year.
The exchange has had to suspend and resume trading for multiple banks as they hold emergency meetings to approve capital increases, bonus share issues, and, most importantly, merger plans to comply with the CBI's reform directive. For example, Al Taif Islamic Bank resumed trading after its AGM approved a merger in implementation of the banking reform document. The stakes. This reform addresses a critical weakness. Experts point out that many small, weak banks do not provide real economic services, but have instead been used for speculative activities and even as channels for money laundering and dollar smuggling. Consolidating the sector is meant to build trust, attract foreign investment, and create banks capable of financing Iraq's economic growth. The stock market and the broader economic crisis. Beyond the banking turmoil, the Iraq Stock Exchange itself is poised for a potential transformation. The chairman of the Iraqi Securities Commission announced the imminent launch of a 2026-2028 strategy aimed at turning the ISX into a leading regional financial hub. The plan focuses on digital transformation, attracting foreign investment, and enhancing transparency. However, this vision for the future clashes with a harsh present reality: the human impact of political paralysis. The caretaker government's limited powers have led to an unprecedented crisis. By the end of 2025, salaries for approximately 8 million state employees, pensioners, and Social Security beneficiaries were delayed. In an economy where the state is the primary employer, this isn't just a bureaucratic issue, it's a social emergency that threatens to fuel widespread discontent. With a suspended parliament, over 120 draft laws and 6,000 administrative decisions are frozen, along with infrastructure contracts worth an estimated $8 to $10 billion. The economy is, in many ways, in a holding pattern, operating at 20 to 30% of normal administrative capacity until a new government is formed. Conclusion: a nation at a crossroads. So what does this mean for Iraq as it enters 2026? For the dinar, expect continued official stability at around 1310 IQD USD, but with a persistent gap to the parallel market rate until the political deadlock is broken and liquidity improves. The CBI has shown no appetite for a revaluation, focusing instead on defense and reform. For the economy, the country is caught between ambitious, technocrat-led reforms in banking and finance and a paralyzed political system that is choking day-to-day governance and causing a severe fiscal crisis. The path forward. The immediate future hinges on the formation of a new government, expected to take several more months. Only then can the state address the salary crisis, resume suspended projects, and provide the stable foundation the banking reforms and stock market ambitions require to succeed. Iraq's story in 2026 is one of a system trying to modernize from within while its political engine is stalled. The stability of the dinar is a testament to the central bank's efforts, but it is a stability under immense and growing pressure from the realities on the ground. I hope this detailed overview provides a solid foundation for your video. If you would like me to delve deeper into any specific area, such as the historical context of dinar speculation or a more detailed analysis of a specific bank's performance on the ISX, please let me know. Conclusion: a nation at a crossroads. So what does this mean for Iraq as it enters 2026? For the dinar, expect continued official stability at around 1310 IQD USD, but with a persistent gap to the parallel market rate until the political deadlock is broken and liquidity improves. The CBI has shown no appetite for a revaluation, focusing instead on defense and reform. For the economy, the country is caught between ambitious, technocrat-led reforms in banking and finance and a paralyzed political system that is choking day-to-day governance and causing a severe fiscal crisis. The path forward. The immediate future hinges on the formation of a new government, expected to take several more months. Only then can the state address the salary crisis, resume suspended projects, and provide the stable foundation the banking reforms and stock market ambitions require to succeed. Iraq's story in 2026 is one of a system trying to modernize from within while its political engine is stalled. The stability of the dinar is a testament to the central bank's efforts, but it is a stability under immense and growing pressure from the realities on the ground. I hope this detailed overview provides a solid foundation for your video. If you would like me to delve deeper into any specific area, such as the historical context of dinar speculation